Hey traders, welcome to the channel. I'm your trader and trainer, Mr. Paraskul over here. So again, we are starting today with a day with a pre-market live analysis in which we are going to understand how are you going to have the setups ready for the today's intraday trading in the market. We are going to go with the fundamental analysis as well as the technical analysis in the market, and we are going to study the major indexes, the US, the SPY, the NAS 100, and the US 500, along with the major shares that are actually highly volatile in the market and have been performing very well in the intraday trading in the past few days. So we are going to go with the both the fundamental analysis and both the technical analysis of all the scripts. So before starting, please do subscribe to the channel and hit the like icon, guys. And if you have any requests for me to analyze some kind of security which you really want to do, you can mention the same in the comment section. I've opened up the live chat box over here as well. Okay, so let's start with fundamental analysis first, and let's look at the calendar for the Forex Factory, and let's see if there is any important news that is going to be released in the market for last day, since this is the last day, Friday for today and the last trading day. So what we are going to do, yes, we can see that yesterday there was a USD FOMC normal speech is over here as well. So there was a huge volatility in the market, and market has given good returns in the past day as well, as we have done in the live channel itself. Yesterday I told you the market will go towards the, again towards the major highs over here, and we will look at the yesterday's chart of the SPY. The market actually breached the all-time highs and created a new higher high of all-time high. Okay, and this is how we have traded from the last few days as well. I have been showing you the past analysis and my live trades as well. So yesterday, if you look at the trades, the price has given us, in the first trade the price gave us 1:3, and then the second trade was a little bit stop loss in the market, and then the third trade was again 1:3. The market went up and created a new all-time high from here, and then when another continuation trade was taken from this level, it was a kind of a stop loss, and then the market stopped. So in total, 3 plus 3 minus 2, we have created around 4%, or we have generated around 4% yesterday itself. Now let's start about the fundamental. You can see that there is no important news in the USD today. Only the CAD news is there exactly at 7:30 a.m. and it has also been released, which has been a highly positive over here. So that means if kind of a correlation that exists between the Canadian economy and the US economy, there can be a good positive momentum for the US economy as well. But just hold on, guys. So sorry, guys, there was a phone call. So as I was speaking, that according to the fundamental analysis, there is only CAD important news today and not related to anything related to USD. Next week, there can be high volatility in the market. If you will look at the next week's news portal, then we can see there is a lot of news that is going to be released in the market. The first very important news about the CPI that is going to be released on the Tuesday itself. And then on the day after tomorrow, or you can say the 2 days afterwards, you will see the PPI index going to be released on the 16th of July. So 15th and 16th, we can expect a good volatility in the market, and you can expect some good returns or the generation of returns. And last but not the least, Thursday also has a core retail sales data that is going to be released in the market. So basically, on all the times, if I'll tell you with the experience, the third week of any month is highly volatile. It stays volatile because of all the economic news or the economic data that is going to be released in the market, and that actually creates a huge volatility. Every day there is a USD news over here, over here, over here, and over here as well. So full week there can be huge volatility, and we can expect good returns to be created in the market. Now coming to the major, you can say, journal for the today. If you will look at the stocks which are into the news today, so that we can expect some good volatility in it. So not much has been dig up today, as the news has been stable for today. So we can expect a sideways volatility in the SPY as well. But again, you can see that the Nvidia has been in the news for some period of time, so that we can expect a good volatility in the Nvidia. So we don't look at the news for the purposes of understanding whether the price is going to go upside or downside. Nobody knows that, and that's why for technical, or for understanding the direction of the price, for relating to the technicals or relating to the intraday and the swing trading, we actually follow technicals only. So If you want to understand the direction, identify it and make the intraday trading decisions and or the swing trading decisions, do take it upon the basis of the technicals only. The fundamentals are basically to understand or to identify when is the volatile period in the markets. If there is economic news, as I told you, let's say next week there is going to be important news or economic important data that is going to release in the market, and that's why we can expect that there will be huge volatility in the market, and we can expect good returns that can be generated, because as an intraday trader, your volatility is your best friend. People say that trend is the best friend, but even I'll say that if there is no volatility in the market, there is no use of the trend. Even if you say that this is a buy trend over here, but there is no actually volume coming in, there is no volatility coming in, then there will be no price differences. So from the past few days or the past few months, we have been seeing the SPY giving us a good returns in the market because of huge volatility. And this is all you can see. Let's go on to the SPY on our daily chart, and then we will understand how the price is behaving. So let me hide the drawings. And exactly the way the price has been telling us that initially I told you the price after creating a huge sell leg in the market over here, from the April onwards, we have been seeing the buy leg to be consistently falling towards the upside again and again. And exactly on post Independence Day, we discovered that the market wants to create a sell leg, and it did. The market took a pullback over here, creating a new higher low and then a new higher high in the market at the roundabout level of 630. So now price is actually creating new higher highs on the daily basis, and what is imminent is a good selling leg in the market, which I've been telling you from the past two live streams as well. But to understand and identify when this sell leg will actually happen in the future, you have to look at the price action at the very small level or the very smaller time frame, so that we can understand if the structure or if the the momentum in the short levels are changing. Then because the you can say that the price is actually following the short term and then goes to the long term, then you will see impact on the long term basis of the long term charts that the price will fall towards the downside. Okay, so over here what we're expecting in the SPY today, so I'll give you the range for the SPY. Since this is an all-time high, we have no certain liquidity or no seeable liquidity, foreseeable liquidity around at these levels where the price can lead to. So we have made some psychological levels. As I told you, if the price starts in the range, see, it's very easy to trade within the range in the market, because you know where your next target or next low is. Okay, but this is a kind of a very uncommon situation where you can see that the price is creating new generally higher highs of all time, and there is no liquidity on the upside. So right now we are trading or we are riding on the outside the range of the market. And the best type of trading that can be done and with the high probability trading can only be done when the market actually specifies some range. So whenever you can see that the key levels for the downside are very much visible, that you can say that this is a major key level where the price has taken out the previous kind of a higher low in the market than the previous support, which we can say at the level of 618. So this is a very crucial level which we can see over here, that yes, the market opts to, if the price starts going towards the downside, then it will opt to take out this level, or it will try to take support from these levels. So this is a very attractive level where the price can come into the future for sure. Okay, and now if the price, let's say, stays in the bullish momentum and the price continues this sell leg over here, this extended buy leg over here, and the price further continues towards the upside, then you have to play very cautiously, because buying in all-time highs is not so easy, guys. There is a huge volatility that is or the huge liquidity that is residing on the lower levels rather than on the upside levels. People are much more interested to buy because the price is increasing on a daily basis, and if something is increasingly on a daily basis, then there are less and less sellers in the market. So there will be huge demand zone, or you can say there will be huge demand rather than the limited supply in the market. So for to abruptly, or you can say to equalize or to eradicate this irrationality in the market, or to take the market back to the equilibrium, the mean reversion theory stands here that the price will try to come back to the normal levels, or the mean reversion will be there after this major huge buy leg in the market. And if you will look in the past as well, this is not me telling you, this is the data telling us that whenever the price takes a huge plunge or the huge move towards the upside, the odd two thing is the basically that the price will take a sell leg over here, and again the price will flow towards the high side, and then again the price will try to create a sell leg in the market, and then from here the price will try to again do the same thing again and again, that the price will try to move towards the upside, until and unless if you will see some kind of support breaking in the market. So as you can see from this major support over here, if you will look over here, the level of 618 is why I'm telling you this is important, because the price previously took support from this level only and then created a new higher high. So if the level of 618 stays below, the price stays below this level, then we can expect the market to create a good sell leg over here and stay below the levels. And the short, basically the short people, or the, you can say the traders who are doing short, they are going to make some money rather than doing long. Okay, so this is how we expect the market prices to going to be in the future itself. And now if you will look over here for the intraday levels, if you are intraday trading in the markets, let's look at the 1 hour, and then we will see what is happening over here. So as I told you, the last high created by the market on the 3rd of July actually broke out yesterday over here, and the price sustained above, and after taking out this major liquidity, the price closed in the downside, you can say levels on the market. So this was a good bullish day, but the closing was towards the downside. So majorly when we are preparing for the next day or the opening of the day, we have to very much focus on what did happen on the, you can say very on the closing itself. So if you can understand what is happening in the closing, then the opening market can actually give us a good infrastructure of where we should land into the zone of either buying towards the upside or towards selling towards the downside. So since the market closed in a sell leg over here, so let's go on a smaller time frame and we'll understand it better. If the price over here, if you look at the 5-minute chart, the price has created a good sell leg over here. Okay, now two things can happen, or three things can happen in the market when the market opens. So either the price can gap up and will start from here, either the price will gap down and will start from here, or the price will start moving from the sideways. So these are the major three probabilities that, actually these are the only three probabilities that can happen in the market. Either the market will gap up, or it will gap down, or it will start sideways. Okay, and in the three situations we have to plan according to the closing of the market. The closing leg of the market was a good sideways over here. So if the market is sideways towards the downside, or sorry, market is actually moving towards the downside in the closing, now you have much more better price action to look at. So the structure will be something like this. If the price gaps up, then we are looking for good selling opportunity, and then after the selling, the price might continue towards the upside. Okay, so the imminent thing is, if the price gaps up, you have to wait for the selling leg to be completed in the market, and then you can expect the price to go towards the upside again. Now there comes the second situation. If the price after the sell leg has actually gapped down, that means the price has created this major sell leg over here, and we are looking for a pullback towards the upside. So we can actually make some good money while the price takes out a good pullback towards the upside. And the further course of action, or the further future action, price action, will tell us whether the market wants to continue towards the downside, or it will try to move towards the upside and take out this major high over here. So this is how the two momentum will come. So if the price gaps up today, we are expecting a good pullback towards the downside, and then we can take the buying opportunities if the market creates a series of higher highs and high lows. But rather, if that doesn't happen, then you can expect the next probability, if the price can gaps down, and from here we have to look for a pullback, and afterwards we can start either selling towards the downside, or the market might continue towards the upside and take out the next the previous high and create a next all-time high in the markets. And then last but not the least, if the market starts sideways over here, then wait for the first leg to be created. If the market starts sideways, we cannot wait, or we cannot just trade in the first opening candle itself. We have to wait for the market, because the first few candles will tell you either the market will take us downside. So the range for the sideways market is something like this. You can expect the level of 625 if this gets broken, or the level of 626. So 626.64. So these are the two levels on a very intraday, you can say a short term basis. If the price levels are this, and the price if starts from here, then after a good pullback towards the upside, start selling in the market. And if the price gaps up above the level of 627.6, then you can expect the price to give us a good pullback towards the downside, and then you can start buying over here. If the market range starts in between, as I told you, if the market starts sideways, wait for the price either to take out this high or to take out this low in the market, and the next further decisions can be taken based on the price action. So if you will look over here, if you understand the price action, you will be getting such trades like this on a daily basis. Same things happen everyday basis, and we can make profit on the same basis. Like over here, if I show you the past 2 days, the market was in a sell leg when the market closed, and market gapped up from here and continued the buying momentum, from which we expected that then now what is imminent is that the price needs to create a sell leg even before going towards the upside. So over here we did sell over here, and we have taken a target till over this major resistance, which the price mitigated and gave us the target over here about 1:9. And now after giving us a good pullback over here, so let me hide the drawings and let you understand this. So after creating this sell leg, the price created a huge buy leg, and after we have made some good target from the imminent sell leg over here, once the price starts creating a series of higher highs, and again we understood that the price might try to continue towards the upside, so that's why we started taking buy opportunities on every support level. And that's how very simply the price created a series of higher highs and higher lows, giving us two good trades towards the upside. And then further price action needs to be decided based on the next day momentum. Now looking at the next day over here, as a market did what over here, after creating a good buy leg over here, the market started sideways, and as soon as the price starts sideways, you have to wait for the first leg to be created. So no trade was taken in this leg, rather it was waited where what we can do in the first leg itself. So after taking out the first leg as a sell leg over here, they understood that the price has taken out this major trend line trap over here, the price has taken out the sell leg, and now it might further continue towards the upside and will try to take out the previous high over here. And that's the same proposition that we took, and we were able to take good profit from this level as well. The buy was taken, and then again, as soon as the price continued to take series of higher highs and higher lows, we continued the buying proposition over here. So if you will see the drawings over here, the same trades you can see in the market that we have taken in the market in the live screening, that the price after creating this sell leg, the buy opportunity was taken, and after this buy, it was expected that the price might create a little bit sell leg, and that's why this selling was taken in the market, but that didn't happen. Rather, the market continued towards the higher high, and after creating a good sell leg over here, we another time take a buy opportunity, taking a 1:3 target over here. So again, the same proposition was taken after consistently following one setup can give you enormous returns. So after the price created another sell leg, we expected the price to continue further, but that didn't happen. Rather, if you will look, the price created a series of consolidation and then fell towards the downside. So as I told you today, that majorly SPY, if you will look, the closing in towards the downside, and this is the major range of the market. If the price starts above this level, then we have to wait for the price to give us a good selling momentum. And if you want to make some good return out of it, you can actually start selling. If the price gives us a good chance or a good resistance level, then we can expect the 1:3 target till over here, and the price can continue till this target as well. So first opportunity will be dependent upon the opening candle. If the opening candle is also green, then we can expect that the market can take a good pullback or a retest towards the downside. And from this selling point till this level, you can actually start selling and absorbing the profits as well. Now, if the price goes below this level and starts from here, then if the first candle is red, then we are expecting the market to fill this gap up. But if the market has starts with a green leg, then you have to wait, because the buying momentum is there, and you have to wait for the first signal, that is a creation of higher high. Only then you can take a buy opportunity from here. And if the price starts sideways, wait for the first leg to be created, as I shown you in the previous trades as well. Wait for the first leg to be created and then see where the first leg heads to, and accordingly we can decide on the future price action, where the price is coming towards the upside or downside. Now let's come to the next thing, is the NAS 100. And NAS 100 has been doing very good in the last few days as well. And since the market is about to start, you can see that the market has started as well. The NAS 100 first candle is being there. So if you look at the daily chart over here, let's look at the daily chart in the NAS 100. So even NAS has already taken out the major all-time highs over here, and this has been actually been you can say very much expected in the market as well. This was not something unexpected, because whenever there is a all-time highs in one index, the second index or the third index actually tries to replicate the same. However, if you will look over here, NAS 100 is a little bit faster than the SPY, because the NAS 100 actually took out the major higher high 2 days before, and after within the last 2 days, where we have seen that the yesterday the SPY was on a good green candle, the SPY has created a negative candle over here, and now what we can see is that the price actually is trying to continue towards the making a sell leg over here. So if the price continues over here, the first target that you can expect in the market is the level of 22,600, and the next level to be targeted is around 22,391. So these are the two levels. If the on a shorter time frame as well, if you will see that the a creation of series of low highs and low lows, that means on a shorter time frame the price wants to continue the bearish momentum, and you have to target the levels of 22,600 and 22,400 over here, which you can expect the good profits to be taken care of. After taking out this level, then the price, if starts reversing in the nature, then we can expect the levels of 22,900 to be taken care of if the price stays bullish for the further move. Going on a smaller time frame, let's look at the 5-minute time frame, how the price is moving, or actually behaving over here. Okay, so let's see from here what is happening. Okay, so over here, what did happen in the last day as well? The market actually, concluded sideways. This is, I think, 24-hour chart over here with the pre-market data. From next time, we will be using only the 6-hour data over here, and accordingly, we are going to manage some positions over here. So this is a London session. That what has happened in the, you can say, NAS 100 over here. The price has been creating a series of lower highs and lower lows, but now is consolidating a lot. Okay, in a 24-hour data. So this is the data with the pre-market data as well. So over here, what we can see that the price is actually forming a you can say kind of a triangle pattern over here, and you should be looking for the good breakout over here. So either the price can give us a good breakout on the above side like this, and the price might continue towards the upside, taking out the level of 2200 first. And if that doesn't happen, rather the reverse happens, that the price actually takes out the liquidity from the downside or decides that the price should continue towards the downside, then as I told you, the price first target will be around 22,600. So this is the major two levels of the 20 NAS 100 if you want to trade in the same. Coming to the Apple, you can see that there was a good volatility, as I've been told you that initially yesterday itself when we saw the news, there was a mention of the Apple, and because of which we have found that there was a huge volatility in the Apple yesterday itself. So today you can see that what has happened in the Apple is that the price has actually consolidated a little bit, and now you should be waiting for the breakout of this consolidation zone. If the consolidation, you can see that this is a good rectangle over here. If the price sustains below this rectangle and the price gives us good continuation method, then we can expect the price to come downside and take out the liquidity from the levels existing at these levels of 208, 209, and 210. If that doesn't happen, rather after the breakout, the price gives us some kind of trap in the market and still continues towards the upside, which is actually a high probability as well. If you will ask me around, there's a high probability that the price might continue towards the upside and take out these major highs over here around the level of 213, 13.5. So try to look out for traps over here. The price is very highly probable that the price will try to break out this box over here, take out all the liquidity from the downside, and then will start reversing towards the upside and taking out the major liquidity towards the upside again. So this is how the trap works when there is a huge consolidation in the market, and same vice versa can happen. So let's say if the price doesn't do this, and let's say the price decides to break out towards the upside first, then the price will try to target this liquidity. And after forming a trap from here, the price will see continue a series of lower highs and lower lows and will take out this liquidity. So majorly, whenever the price actually forms a rectangle pattern in the market, this is how price generally behaves, taking out both sides liquidity and then going in the major direction. So what we have to do is let the first false breakout to be happen in the market. Okay, you have to accept that the first breakout can be a false breakout, and then you can look for the trap opportunities. It might also happen that if the price actually goes towards the upside, it can continue. But if it is continuing towards the upside, the price action will let you know by giving you the market structure whether the price is going upside or downside. So, guys, if you're still confused about the market structure, I've uploaded the video on the our channel about the retail market structure which we use in the analysis and taking out the trades as well. You can watch this proper video of about 25 minutes and you can practice n number of charts so that you can become a pro in it. So we are actually uploading a lot of educational content on a daily basis. And if you are new to this channel, you're most welcome over here. You're most welcome to ask your queries. I've also mentioned my email, thenovelasset@gmail.com. You can anytime contact me and even sign up for a one-to-one session if you're having some issues in your trading day-to-day journey. Okay. So coming back to the next analysis, let's come back to Tesla. As we have been seeing that there is a huge volatility in the Tesla from the past few days. First, the market actually dropped down 7% over here, and then the market started retracing towards the upside, filling all this gap over here. Uh, I think on this day, we have seen that there was a huge negative earnings report in the market related to the quarter of the Tesla, and that's why the market actually fall down. But I have given you, the price actually starts retracing from here, then we can expect the level of 312 to be taken care of before further deciding the further price action, because this is actually a fundamental driven right now script as well. Not much technicals are good in it, but because of the fundamental domination in the market, you can see that the price action is being volatile again and again. But why I stay away from this such kind of shares while I'm day trading in the market? Because of one panic move. So price can consolidate for a lot of period of time, and then one panic moves give it all. Okay, so what I really want is the distribution, or you can say a good distribution between the consolidation and as well as the panic moves. I love the volatility, but I also hate getting stuck in the consolidation zone when the price is not going anywhere. It is hitting the stop losses of the buyers as well as the sellers. So both of this thing is not I'm not favorable of this, but rather I would be favoring such things where there is an equal distribution. That's why I trade mostly in the SPY. There's a huge there's always equal distribution about the volatility and the price action that happens in the SPY as well. No doubt there are profit streak as well and the losing streak as well. I have lost when I start losing, it's a losing streak, but when I start winning, it's a winning streak as well. But on an average, we are getting a good month, a good week, and that's it. Okay, that's what we expect in the market to give us, and to be consistently there and perform according to your processes. So today, as I told you, the opening has started, the market has actually gapped down, and this was the one thing that I was telling you, that if the market gaps down and then it creates or it sustains the downside momentum, then you can make your first profit towards the upside. And then if the price continues towards the downside, it will create something like this, and you can expect the market to go till the level of 618. This is the first target that you can actually expect, that the price can take out all this if you're doing swing trading. If you're doing intraday trading, be calm and be patient and look at the price action at the smaller time frame around 5 minutes. And if you're doing I think swing trading, then you should follow the 1 hour chart itself. Okay, guys, so this was the major analysis for the today itself. If you have any queries, you can mail us on the novelasset@gmail.com. And if also you can mention your queries in the comment section as well. Till then, hasta la vista. Have a great weekend ahead, because this today is the last trading day, and I hope it goes amazing. And let's meet you on the Monday itself. For next 2 days, I'll be uploading good educational videos. If you have any suggestion that what video should I upload, you can also let me know in the comments. And till then, sayonara, hasta la vista. Have a happy weekend.